Hey everyone, Sam here. Let's get started. Good to see everybody. We will run through our daily dose of supply demand zones that work. Most problems in trading and in life are because of two reasons. We act without thinking or think without acting. This can be a big problem in the world of trading and investing. So think about that. Make sure that is not an issue. We do these sessions every day. They're meant to be quick, impactful um, sessions where we go over trading opportunities that our strategy and algorithm have come across over the past day or two, and we go over what made supply demand zones obviously that work, and then if something doesn't work, why it didn't work, and all that. Try to add a mini lesson in here. And the purpose for these, again, is because this is all based on the original supply demand strategy developed back in the 1990s on the trading floor of the Chicago Mercantile Exchange. Since then, there's a lot of people talking about and teaching supply and demand that have never traded it and have added a lot of twists and turns to it. And so these sessions are meant to hopefully simplify and get rid of the clutter and confusion and bring things back to what's real. I'm a licensed fund manager, but the Pinnacle Institute is not an investment advisor. And make sure you understand that there is no guarantee of success when it comes to trading and investing in the financial markets. Furthermore, available research does strongly suggest that most active traders lose money. And so be careful, take your time, don't rush into this. And make sure you understand what you're doing. Make sure you understand and are okay with the risk involved in all of this. All right, let's take a look at some opportunities. Today is Monday, so let's look at some stuff from last week and go over what we did and why we did it. Remember these screenshots where you see the picture and all the chat over here? These are all screenshots from our live trading and analysis sessions we deliver with our members. So this was FESX. If you don't know what FESX is, it's kind of the S&P of Europe, sort of. It's a futures market similar to the DAX, and its actual name is the Euro Stoxx 50. Okay, it's a great market, and it's one of the many global equity index markets that we look at and apply our supply demand strategy to. So here we were going over some supply and demand zones middle of last week. And as you can see, on the 6th, which was Friday, this is an important lesson. So back to what we talked about a minute ago, two problems a lot of people have are we think without acting and we act without thinking. Very dangerous to do that in the financial markets. What happened last Friday, the 6th, right, which is when these trading opportunities met entry, is we had a big economic report that came out in the United States, right? It was non-farm payrolls, and the market moved a ton. Initially, if you look on the left here, the market declined on the number, and that's a pretty big drop, all the way down to our qualified demand zone here, right? Competition to buy at demand, even though the number was perceived to be negative. That's why the market dropped so much, right? Initially, competition to buy at demand, which is what demand is, right? Caused price to turn and pushed it higher. Okay. Another way to say this is down here at demand, the last news-driven seller sold at a price level where demand exceeded supply. So once that last news-driven seller sells, you have any supply-demand equation where there's no more sellers at that price level and a lot of willing buyers left over. That's why the rally happens. Price went higher and ended up closing out the session into the supply zone, right? And that's what prices do. They move from demand to supply, wholesale to retail. And the key is to apply those structure location rules to identify where those big supply-demand imbalances are, as that is where price is most likely to turn. We apply the strategy rules to any market, any financial purpose, any time frame, doesn't matter. Here's silver. Silver on Friday also had a big rally. And then this is, I believe, some of the price action from today over here. But what I want to point out here is location. Notice the location of this demand zone we were going over with our Pinnacle members. Okay, it was well below fair value. Okay, so and we can see price drop pretty quick right into the demand zone, our qualified demand zone. Notice it just touched the demand zone 2 or 3 times here. That's because the imbalance, the supply-demand imbalance at that zone was so large. Okay, big imbalance down there. And then we can see price moves right back up to the 22 area, which is like right up here. Okay, back up to fair value. And then, of course, late last week, the NASDAQ, for example, right? Big drop into same thing. If you look at where, yes, prices dropped to demand and then rallied all the way back. That was a very big move in the NASDAQ right into our real demand zone down here. But look at where prices fell from. That's the important lesson here. This area right here is likely to pull prices right back to it, which it did here. Okay, that's the 14,850 area. Here's the 14,850 right in here. And you can see price came down to the demand zone down here. Good location, good structure, and then rallies right back up to this area, right? So that was on the 5th. So that was Thursday. And then we also had on Thursday the big drop in the NASDAQ from supply. We went over this in this session last week, right? Notice notice the supply zone itself. Notice how strong the move away from the supply zone was, suggesting a big imbalance out of the rally-based drop supply zone. Okay, suggesting that another move up into that area is likely to produce another move to the downside there. And then, of course, that drop on Thursday just brought prices down to our qualified demand zone here in the S&P, the 420 area, right? The 420 looks like about 75 right there. And a couple pullbacks into there. Now, this right here, again, was the number. So you can see the number comes out on Friday morning, big gap down in the S&P. The S&P then continues to fall because so much supply is coming into the market. It then reaches a price level where, according to our rules, there's a big supply-demand imbalance on the demand side. Again, that last news-driven seller sells in the SPY. That's the ETF for the S&P. And the S&P ended up rallying about $10 from there in one day. Now, that is very rare, so don't expect a $10 move in the SPY in one day. However, on this day, the profit zone was there. The supply zone was higher, and a number of markets closed into supply that day, like this one. Okay, that's the rally right up into supply. Most of the major stock markets had those demand zones down there and the supply zones up here, and that is how we do it. Structure, location, hopefully that was helpful. Have a great rest of your day, and we will see you tomorrow. The impact of war, unfortunately, and or any major news event has the same impact, right? The more supply or sellers come into the market, that's going to push prices down to demand zones that are far below fair value, right? Okay. So it always plays out the same way. Supply, demand, and fair value never don't play out as they should, right? It's that's how any market out there, works. Can we make a video showing how the lines are drawn? Unfortunately, we can't do that in YouTube. That would not be fair to our members at the Pinnacle Institute. But hopefully you can get a decent idea from these videos here. Adrian, great question. Severe market conditions, can price move past multiple demand zones or supply? So we have a very important rule. Yes, if there's, well, here's the thing. Let me answer it this way. The more significant the news event, let's say it's a very negative news event, very negative, right? You're going to have a lot of supply coming into the market. Therefore, you want to match that supply up with demand zones that are far below fair value, where there's likely to be enough demand to stop price from falling and cause price to turn. So when we know, now we don't know what the news is going to be before it happens, obviously, right? However, if we know that, like Friday, we knew there was an economic report coming out, non-farm payrolls, that can be, that can bring a lot of new buyers and sellers in the market. We know that. Sometimes it doesn't, sometimes it does. So if we have a number coming out, okay, if we have a number coming out that has the potential for that kind of impact, and we know what numbers those are, we ignore any inside the range supply or demand zones and focus on proper location supply and demand zones. Does that make sense? That's a big rule. Yeah, and I'll show you the stuff as it comes out, right? Tomorrow we'll look at stuff from today and all that. But again, we can't put these zones out in advance on YouTube because, again, that wouldn't be fair to our members. We take some of these trades as well, but we want to do our best to walk that line of sharing the information as much as we can, because we know there's a lot of confusion out there from all the different variations of supply and demand that have popped up over the past 10, 15 years. All right. Have a great rest of your day, and we'll see you tomorrow.